There have been times business owners, directors, shareholders, or trustees have asked if they are obligated to pay further fees when told there is a fee known as annual returns to be made for their business because it's mandatory. Some of them give reasons like they still operate from home, or they were told that NGOs don't pay tax, or that they have not started making sales or profit, or that they thought they were done with the CAC after their business registration. With any of these situations, they are always surprised that all CAC incorporations are mandated to file their annual returns as at when due. With this, we are left in an explanatory session of the statutory post-incorporation activity of annual returns filing, which is mandatory for registered entities in Nigeria as provided by the Companies and Allied Matters Act, that's CAMA of 2020. In this video, I'll show why annual returns filing is not tax payment by highlighting the similarities and differences between the concepts of CAC annual returns and the tax board tax returns. This comparison is coming as a result of the mix-up of both terms amongst business owners. At the end of this video, it should be resolved whether CAC annual returns filing is tax payment. Let's get started, shall we? Let's begin with the similarities. First on the list is that they are both legislative enactments. The Companies and Allied Matters Act, CAMA of 2020, was established by the legislature, and it provides for all business entities registration, regulation, supervision, incorporation, management, and compliance requirements by businesses in Nigeria. Likewise, there is the Taxes and Levies Approved List of Collection Act of 1998 as amended in 2004, which was also enacted by the legislature to empower the three tiers of government to collect, management, educate, and regulate taxation in Nigeria by receiving taxes, levies, and fees from taxable entities. The second similarity: both are established by specific laws with agencies to regulate business entities. CAMA 2020 is the primary law that provides for business setup and operation in Nigeria and created the Corporate Affairs Commission, that's CAC, which is the body in charge of incorporations. Other laws created for business administration include the Labour Act and Employee Compensation Act. For the tax board, the FIRS Establishment Act of 2007, for example, created the Federal Inland Revenue Service. The states are also empowered to create a tax board authority. Other laws that govern tax payments in Nigeria are Value Added Tax Act, Companies Income Tax Act, Stamp Duties Act, Finance Act, and a few others. Number 3. Both filings or payments are e-filings. From the inception of a business setup and up to winding up under CAMA, there is provision for any process to be done by an online application or e-filing on the CAC Company Registration Portal, that's the CPR. For tax returns, there is provision for business tax registration to be done online for filing and remittances on the FIRS Tax Pro Max portal and that of the states. Next is that both filings are reports and remittances. CAC annual returns filing is a levy paid once a year along with a financial report of the business for the year in view. Tax payments are also business remittances done as a one-time payment, just like the stamp duties, or as a monthly or yearly payment. Number 5. Both have a time frame within which to file. CAMA provides a period or duration that all corporation types are required to do their filings, and it is same for the tax returns. The various tax laws stipulate the window for the various statutory filings of business taxes. The last on this list is that both have penalty for non-compliance, where a business or incorporation fails to file at the right time. The business entity or the officers in charge are liable to pay late filing fees. Also, tax remittance done later than the period fixed attracts late filing fees payment that may be more than the original fees. Now let's look at the differences, which is the crux of this video. First is that the CAC is a business incorporation agency that provides for the registration, regulation, supervision, and management of business entities. By the provisions of CAMA, there is nowhere it is contained that it should receive taxes from incorporations. On the other hand, the tax board is a tax agency, meaning it is responsible for the assessment, collection, and accounting of taxes for businesses on behalf of the federal government, the states, and the local government as it applies. Again, CAC receives annual returns. Tax returns filing is made to the federal, state, or local government tax service board. Number 3. While CAC annual returns payment is simply a levy charged on business entities, tax returns is strictly tax. Number 4. Annual returns filing is a yearly one-off payment for incorporations, irrespective of the businesses or incorporations turnover. On the other hand, tax returns payment for a business is in percentage form, which means it is dependent on the business's turnover for the relevant period of time. The fifth difference. For CAC, the penalty fee for late filing is a fixed amount, whether as daily or one-off as yearly. For the tax board, late filing fee is charged for the relevant period under assessment, which could be monthly or yearly. Moreover, just like every other establishment that receives funds, the CAC as a government agency also carries out its functions while receiving funds as revenues and to sustain it as a going concern to serve citizens appropriately. Again, for the records, all CAC incorporations are mandated to file their annual returns as at when due, with the exception of none. This brings into focus incorporated trustees or non-governmental organizations, that's NGOs. As regards incorporated trustees, that is IT, the difference between annual returns and tax returns is that while it is mandatory that an IT file its annual returns with the CAC, it enjoys zero tax or tax exemptions in some instances with the Tax Service Board. So, as a business owner incorporated in Nigeria, it is expected that you know the differences between CAC's annual returns and tax returns for the federal, state, and local service boards, so that when your business is called on for compliance purposes, you know it is an obligation to fulfill. Thank you for watching. If you liked this video, give it a thumbs up, comment, and share. And if you'd like to see videos like this, hit the subscribe button and click on the bell so you get notified when I make a post. See you in my next video, and bye for now.